President Trump just got reelected, and while people feel a lot of different things about that, there's at least 13 things that we've identified we're looking out for that are going to play a part in people's financial lives moving forward over the coming weeks, months, and years. 2 quick disclosures. Number 1, this is not financial advice. I don't know your situation. You don't know me. For those of you who don't know me, my name is Will. I'm a CFP with Matt 25 Capital out of Texas. The second thing is that while we're going to be covering political topics, this is not meant to be political commentary. We're going to be just addressing certain things that we see that we're going to be looking out for, not just now, but on a go-forward basis now that the president is going to be assuming office again. Number 1 is the economy. Lots of people said this was the main thing they were voting on, but the economy, you have to understand, is actually a very big thing that has multiple moving parts. So let's try and break it down into smaller pieces. A smaller piece of that would be US-based GDP growth versus international. Obviously, the president ran on a platform that said America first. He's also expressed a large desire to impose tariffs on foreign countries. Now, while that could spur domestic economic growth and help spur economic activity here, what that also could mean is higher cost of goods that are obviously coming in from foreign countries. And while we like to think that we can produce everything on our own, the truth of the matter is that we still do rely very heavily on countries like China and Germany and Japan and others to import a lot of goods here. So this could obviously result in more economic activity, more GDP being produced domestically. It could also have impacts on some raw materials and goods that are being used to produce things here. We don't know exactly how it's going to play out yet. Following that line of thinking, if we do have a good growth of GDP here in the United States, that could lead to more jobs domestically. There's lots of moving parts. We're not going to necessarily comment too much on all the different ways that would be affected, but at the end of the day, if the domestic economy is growing and GDP is increasing, that means there's going to be a higher demand for our goods and services, which means there's going to be higher demand for jobs. Another key area we're looking at are interest rates. A lot of people thought that depending on who the president was going to dictate whether interest rates were going to move up or down. A few things have become very clear though since the election. Number 1, the Fed, or the Federal Reserve Bank as it's called, really does move independently of whichever party is controlling the Oval Office. Even Jerome Powell has made it very clear that even if asked to resign by President Trump, he's not going to. So he has served both under President Trump and he served under President Biden. His office really does work within the framework of government. He does report to government agencies and he does collaborate with them, but he is in no way, or his office is really not directly impacted by which party controls the White House. Furthermore, as also obvious from the last few days after the election, the interest rates were cut again by a quarter of a point with future cuts expected. So regardless of who's sitting in office, we see the Fed really does move independently and interest rates are really dictated by how the Fed views the overall state of the economy and what they want to do to either spur it onto future growth or slow it down. It is worth noting, since we're talking about this, that interest rates going down do typically lead to more economic growth, which can spur stock prices and have a lot of other benefits, but it also is a positive thing typically for bonds. Bonds, if you aren't aware, have usually an inverse relationship to interest rates. So as interest rates go down, bonds do appreciate in value. We saw the opposite be true 2 years ago when interest rates were going up so quickly because inflation was going up so quickly. Bonds went down pretty quickly as well. So this leads us to believe that if interest rates continue going down in the future, as the Fed has indicated they could, and as most economists are saying they could, then that should spur bond prices to appreciate, but that also could lead to additional economic growth. As interest rates are going down, the cost of borrowing is cheaper. People usually are spending more money, investing more in their businesses. Again, these are broad implications that are built on a lot of assumptions, but if history proves itself to be true again, this leads us to believe that both stocks and bonds could appreciate in the future if interest rates continue going down. Another area we look at is growth versus value, and this is particularly in relationship to stocks. What we've seen historically is when interest rates go down, investors tend to go more towards growth-oriented investments, whereas when interest rates are going up, they tend to gravitate more towards value or dividend-paying investments. This doesn't necessarily mean you should be all in one or the other. We believe in a diversified approach when it comes to investing, but it is something to note, especially given the prospects of interest rates continuing to go down. Another area we're looking at is food. With RFK coming on to Mr. Trump's team, he's obviously expressed a lot of interest in changing the way that the food industry operates, changing what is allowed, introducing new legislation that would possibly limit what chemicals and other ingredients are used in our food. This obviously I think is a positive when it comes to people's health, when it comes to investing. This obviously, though, maybe should put people at a little bit at a pause when it comes to food companies, only because when the cost of their goods are increasing because they're having to use more natural ingredients, then their profits are going to shrink possibly. I'm not saying that you should necessarily make investing decisions based on just RFK being involved in what he said alone. I'm just saying it's something that maybe you should be sensitive to. Same also goes for the next point, which is pharmaceutical companies. RFK ran on a platform where he was very vocal about them and the way that they conduct business and the way that they make profits. This is something that everyone, I think, should also be sensitive to. Just examine your portfolio, see what's in there, see what types of companies you own, and either you or an investment professional should be making the decisions, do these still make sense to own or not? Another area we're looking at is lower corporate tax rates. And again, we know a lot of people have strong feelings on virtually every topic that's being covered here. We're trying to look at it as unbiased as we possibly can from an economic perspective and a personal finance perspective. But President Trump in his last tenure lowered corporate tax rates. That obviously can spur economic activity because they're now able to retain more of their earnings, which in turn leads to higher stock prices. Same could be said here. So from a purely economic perspective, lower corporate tax rates could lead to higher stock prices. It could appreciate the market and things of that nature. There are no shortage of things that could impact, but that's at least one aspect we're looking at. Another area we're looking at is capping credit card interest rates. This obviously could be a very positive thing for people that are carrying a good amount of credit card debt. Credit card debt typically is anywhere from around 15-18% up to 30% a year. Obviously, that's a very hard thing to overcome. That's something people struggle with a lot in terms of getting out from underneath that burden. The president has advertised and said publicly that he wants to cap that at 10%, which could be a positive thing for people who have credit card debt. It may not be as good a thing for people who own the stocks of credit card companies. Again, I'm not saying go one way or the other. In fact, one of the credit card companies did very well in market performance right after the president was reelected. So it's possible these could still continue to be solid investments. All I'm saying is just be sensitive to the fact that these changes are coming and evaluate whether it makes sense to hold these in your portfolio or not. I just want to take a pause for a second here to just acknowledge the fact that I realized after watching this back myself, I was saying the word obviously and other filler words an awful lot. I don't know if it's because I was over-caffeinated, overstimulated, or just the fact that I was trying to get through 13 different topics all at once and trying to remember everything I was trying to say. Either way, I apologize for that. I will definitely do better, or hopefully try to do better in the future when I do other videos. But I just want to acknowledge that, say I'm sorry, and yeah, please continue and enjoy the rest of the video. Another thing we're looking at is healthcare. Now, we know that healthcare carries with it a lot of strong emotions in a whole bunch of different ways. What we will say, though, is that given the president's last tenure and how he did try to overturn the Affordable Care Act, he was unsuccessful. He has made a number of comments about that for his next tenure as president. We don't know yet what will or will not come to fruition, as is the case with virtually everything on this list, but it's something that we are sensitive to, not just for what the cost will be at the individual and the family level for healthcare itself, because that's obviously one component of your financial lives and people's financial lives, but also when it comes to owning certain types of assets and investments. Does it still make sense to own some of these healthcare companies if major changes in legislation are coming? Also, for those of you who don't know me, my name is Will Snodgrass. I'm a certified financial planner with Mat25 Capital, and this list is far from exhaustive. There's no shortage of things that are going to be impacted in the coming weeks, months, and years. These are just certain topics that we felt are relevant to the people's lives that we work with, and we wanted to express this list to you also so that you're aware of them. You start thinking about them if you aren't already, and you can start making decisions based on what's best for you and your family and what could be the most advantageous way to move forward. Another area we're looking at is oil and gas exploration, fracking. The president obviously is very much for exploring and drilling here in the United States. That could have a lot of implications when it comes to not just the price at the pump, as we've seen a lot of people expressing different feelings about how much they're paying for gas for their vehicles, but also in terms of owning some of these companies, their stock. So something to be on the lookout for. But again, not a recommendation one way or the other, just something everyone should be sensitive to. That kind of really dovetails into regulations in general. The president is really talking a lot about deregulating certain industries. Oil and gas is just one of them, but it's not the only one. So again, If you're not the one personally looking into these things yourself, make sure whoever you're working with is, because this is going to have impacts on a variety of different industries depending on how much regulation they do or don't have once the president really starts rolling out whatever policies he may or may not actually bring to fruition. Another area is Social Security and Medicare. This is something that is obviously very concerning to a lot of people that we work with, because most of our clients are pre-retirees or retirees. We don't know yet what the president will or won't do when it comes to these benefits. We do know he has vowed to protect them. We don't know what exactly that means. We also, though, are aware that Social Security's future in general has been in question for quite a number of years, just because of the number of people drawing on those benefits versus the number of people paying into them. So this is something we actually are looking at all the time, regardless of whoever's sitting in office, but something we also want to make you aware of, because we should be thinking about these things, and not just the generation that's currently drawing from them, but also future generations, because this is going to really impact most of the people that live in this country. And the last item, which I think is maybe one of the most important, is when it comes to taxes. The president has made a lot of comments about taxes when it comes to taxes on tips and overtime, getting rid of local and state deductions when it comes to income taxes. He's also expressed a desire to possibly eliminate all the taxes owed on Social Security, which obviously would have a lot of different implications. But then lastly, there's also the Tax Cut and Jobs Act that he put into place years ago that is set to expire at the end of 2025. And this is something that is particularly relevant for wealthier clients, because it's going to essentially cut the estate tax exemption in half. So if you qualify for that, this is something that we advise people should be thinking about and consulting with their investment, their tax, and their legal professionals. And we've been saying that actually for quite a while. And if it's something that you might be impacted by, I strongly urge you to go speak with a professional about that. Again, this list is far from exhaustive. There are a lot of different things that people are going to be looking at and are going to be thinking about what the implications are one way or the other. We just really wanted to put this out as a short list of topics that people should be considering and looking at and talking to professionals about, and making sure that they are positioned as best as they possibly can, not just now, but on a go-forward basis. If you have any questions, feel free to reach out to us. We're at matt25capital.com. And as always, thanks and have a blessed day.